Continuing on the themes of our last conversation, our next guest has written an op-ed arguing that for an industry that's built on this principle of decentralization, we ended up putting quite a lot of trust in one 30-year-old billionaire, and sort of asks, okay, how can we get back to the original ideals? Joining us now to discuss this is Crypto is Macro Now economist Noelle Acheson, who also happens to be former head of research at CoinDesk and Genesis Trading. So Noelle, I'm really excited to get into your op-ed, but let's just first get this sort of elephant in the room out of the way, which is the Genesis question, since it's big news right now. Don't need you to comment on it specifically, really just more curious about what you think the implications of this is, right? So this is just part of what seems to be a domino effect. And my personal sense is that this is probably not the end of it. But what does this mean? I mean, you know, Genesis is sort of the latest, well, actually, it's not even the latest. It's like one of the latest, you know, sort of players to be afflicted with this. And what are the larger implications in your view?
Hi, Emily. Hi, everyone. Great to be with you. Hey. And yes, you know, wow, what a few days we've all had. What a few weeks. What a few years. Why not? We've all had. I obviously don't. I used to work for Genesis Trading, as you mentioned, Emily. I don't have access to any information that isn't in the public domain already, and I am, along with everybody else in the industry, just really, really sad about everything that's happening. The implications are, we're just finding out now how far the contagion is going to extend, and unfortunately, given what we're all dealing with here, and given Genesis's key role in the ecosystem, there's probably more bad news ahead. That said, what Max was talking about earlier and what others are saying in the industry, they could have a not so miserable ending. There is definitely hope, and the Bitcoin price this morning does seem to be hinting at that. It certainly didn't react nearly as much as many of us expected it to. But bottom line, this is a reminder that what's happening in the industry, what happened at Genesis, and largely what happened at FTX as well, human problems that have happened in traditional finance time and time again. Withdrawal, liquidity issues, they're not unique to crypto by any means. They are fairly common, unfortunately, in traditional finance, in spite of the high regulation. So I also agree with those who are saying that more regulation is not necessarily the answer here. This is not a crypto-specific situation that we are in.
Yeah, so, you know, Noelle, it's almost like we're almost getting past the sort of Sam Bankman-Fried part of the story, and now it's like moving on to the next stage. And you wrote about this sort of contradiction where people in this so-called decentralized industry were putting too much trust in this kind of one individual and one company. The question is crypto learning from this? Like, I think we have to talk a little bit about Binance here. Now, again, you know, nothing against Binance specifically, but, you know, basically we had two exchanges that were sort of overly powerful. Now we're down to one, right? And basically we have Binance talking about a recovery fund. We have Binance, you know, making a play for Voyager. They're literally pages out of SBF's playbook. And one could argue that this is even more dangerous because who's going to bail out Binance if something goes wrong, right? So I'm just curious what you think. Like, are we just kind of doing the same thing now with a different player?
We probably are, but I mean, let's be honest, we always will. It's just simply how human beings work. It's how finances always work. We lurch from one big disaster to another, picking up lessons along the way, instituting walls around the system to make sure they don't happen again, and then we make other mistakes. Mistakes is part of progress, unfortunately, and crypto will continue to make them, as it should. If you're not making mistakes, you're not really trying new things. And what crypto did try to do here is perhaps get a bit ahead of its skis, go very, very fast, and then started taking certain things for granted. Lessons learned, very painful lessons learned. We do have to obviously spare thought for all of those in the industry who today are struggling with the fear, the anger, the frustration, and the sadness because through no fault of their own, they chose to trust. And let's face it, choosing to trust is something that we humans do every single day of our lives in every corner of our existence. And the fact that this is now very painful for many, it's very, very sad. But trust is human. We will trust again, as I was writing about. And this is something that is going to also form an integral part of the crypto markets going forward. Decentralized services, I'm hearing that this is the solution. You have to all go decentralized. Well, that's part of the solution. And decentralized innovation is one of the things I'm most excited about in this industry. But it's not the only solution. Human beings we always have throughout history, chosen, unfortunately, convenience over safety. That's just how we're wired. And we will continue to do so. But hopefully, we will learn also to use the technology in our disposal to make sure that that trust is more manageable, is more transparent. We have more information. There are more controls. And we can, rather than decide to not trust and go full on just relying on the technology, use a combination with some of the decentralized learnings imported into some of the centralized conveniences that most of the users in our industry, current and future, are going to want.
Noelle, lovely to see you again. I want to throw the same question that I threw to Max earlier to you, because it's sort of, you were talking about learnings and how we all need to come to grips with this and understand and so forth. And that would speak to the first offer I offered to Max was like, okay, is this an education thing? Should we all just ultimately teach people and get to understand the value of decentralized systems and then figure out how to embrace them? Or do we need something more brutal? Do we need, a regulator to come in and force these sorts of separations of powers and structures in place that make it? Because in some respects, what regulators have done has been to sort of go back to essentially supporting the old centralized model, because that's how their own structure is based. So how do we get there without some sort of brutal approach to get everybody to actually buy into a more sort of decentralized model?
Well, let's be honest, the brutal approach is simply not going to work, because this is a very fluid ecosystem with very fluid assets. And let's remember how the crypto ecosystem emerged. It emerged spontaneously in many points around the world with virtually no oversight, and grew into the behemoth in a fairly small scale that it is today. Going brutal is simply going to not suppress the risk. It is going to move it to where perhaps it is less easy to control and monitor. The brutal approach, not going to work. Learning will work. But what does learning mean, Michael? You're very correct to raise the point. What do we even mean by that? It means figuring out how to, one, do more due diligence, be more rigorous, not trust less, but simply understand that risks always emerge where we're not looking. And there are technological solutions today to shine a light on those rather dark corners. And some of the suggestions that Max was talking about earlier as well, totally agree. Let's figure out how to tokenize types of lending going forward. And crypto certainly does need a much more robust, liquid, and transparent credit market. Just imagine the kind of growth that could be unleashed in this industry when we get that. Lending is hurting right now, and the withdrawal of liquidity that started with the rise of interest rates, but then certainly got a big kick forward with the collapse of 3 Arrows Capital, and now is probably on its last legs down. Lending is a key part of growth. We do not want lending to go away. We actually want leverage in this system. What we don't want is damaging risk building up where we have no idea that it's happening, and we are not able to control some of the fallout when it eventually breaks. Cycles happen. They move up, they move down. We have to be prepared for that, but we have to do better in making sure that we understand where the risks are building.
Noelle, so happy to see you again. And I have to ask, should we just let it happen? Should we just let FTX collapse and a lot of these other centralized exchanges collapse, if only because maybe too many resources have been focused on the trading aspects of crypto and not the actual use cases? I'm still paid in US dollars, even though I work for a company that's owned by DCG, and we're not paid in crypto. It's very tough for me to come across a use case in a daily basis in my life. Yet there seems to be thousands of exchanges, it feels. Perhaps this is a good thing to happen for the long-term survival of crypto, that we get away from the trading and maybe move on to actual use cases if this thing is going to survive.
That's an interesting question, Lawrence, but a more interesting way to look at it is, who gets to decide that for us? Nobody. People want trading, people will get trading. This is a free market. The services that people want will emerge, and people always want some kind of risk, and they always want some kind of liquid marketplaces. It's also necessary for crypto projects to be able to get the funding that they need. It's also necessary for a clear price discovery to understand the value of what is being built. And you mentioned use cases. Again, who decides? You perhaps don't have any need for the use of Bitcoin as a payments mechanism. I certainly don't either. We could exchange money very simply. But we all know what's happening elsewhere in the world. We all know that there are many corners of the world that would love the opportunity to be able to have a liquid, decentralized, seizure-resistant store of value that at the moment is largely denominated in fiat, but doesn't necessarily have to be going forward. The use case, again, who decides? The utility is in the eye of the beholder, as the saying goes, and we are still figuring that out as we go along. Most of these crypto assets, Bitcoin, ETH, etc., they are what you want them to be. They have different utilities for different people, for different segments, for different investors, and certainly for different cohorts of the emerging population.
Noelle, just before we go, just a quick thoughts on this, because it really is quite striking and feeds into some of the elements of your piece here. New FTX CEO John J. Ray, famous for being involved in the unwind of Enron, brought in as part of the bankruptcy proceedings for FTX. A scathing assessment, talks about unprecedented poor management practices. He's never seen anything like this in his life, he said. Your thoughts?
So much to pick on here. First of all, there's the obviously many details that have yet to emerge, but there's also the WTF factor. I mean, we're all lurching from one what to the next. Imagine what John Jay must be going through, and he's starting to try and pick apart this. And he's seen some stuff, but this is in very good hands. I couldn't think of any better. There's also the recognition, as he is pointing out here, that largely what happened with FTX was human failure, which happens in all industries. This is not a crypto-specific situation, as I said earlier. It sure had a couple of crypto twists, but this is a human failure. This is also another thing to pull out from this, just confirmation that this is very likely to be the most complicated bankruptcy in history, period.